Hello and welcome to this session of the Balanced Trader where we'll be debriefing Friday's session. It's the weekend, so I like to spend the weekend refreshing and just chilling, but I do also make the time so that I can debrief my day and the week and the month if it is that time of the month at the end. So journaling is a really important part of my process, my learning process. It's a time for reflection. It's a time to analyze. I had a pretty shaky Friday. I had a pretty shaky Wednesday, Thursday, Friday, actually, since I started streaming. But I can reflect on that and I can understand what it was that made me shaky. Why wasn't I so comfortable? Why wasn't I taking trades? And there are a few reasons which I spoke about in my other debriefs. Not to make excuses, but it's just, journaling is an important part of my process where I can analyze what went wrong in my day, in my week, in my month, and what are the things that I can do to make those things better. So journaling is really important. I'm actually going to I'm in the middle of just finishing off a couple of webinars on streaming, on journaling and why I think it's important, how you should journal. Now, this is from my personal experience, but I've also detracted from 20 years of trading. I've been on some of the top floors around the world. I've been around top traders. I've been a successful trader myself. So and I am a successful trader. So what I'm trying to say is that what I try to put into my journals is not something I've just made up myself. It's been a long process, an evolving process. I've been, adding and chopping things out of my journals. It's just what's important to me at that time, what I find is relevant, what's going to help me improve on my routine, what's going to help me improve on my execution, what's going to help me improve on all sorts of things. The journals that I will run with you are more focused on the market and how it behaved on Friday and what I'm looking forward to going forward, what I'm carrying over, the information I'm taking from that market behavior from the previous day. But I do also include in my links a lot of my personal notes. I also recommend journaling in a paper pad or something because I do find that writing things down helps. So a lot of journaling, and then again, there's obviously the stats that you want to keep hold of. You generate a lot of execution information when you're trading, and so you want to try and keep a hold of that and use it to analyze and make yourself better. Because otherwise, what's the point? You're making decisions, you're generating data on those decisions, from the decisions, whether those decisions are successful. It's a really good idea to use that information to try and better your trading. So I think when it comes to journaling, there's lots of different, facets to it. There's lots of different things that you need to be on top of. But this is my personal journal, and I'm very happy to be sharing it with you guys to help you move forward. Okay, so just cutting into it, what I'm going to quickly do, I'm quickly going to review my Friday plan because I think it's important to have a look at what your plan was from that session, and then check it out and relate to what happened in the trading day, and see if whether your plan, your assumptions, not assumptions, sorry, your thesis, where the thesis was, how accurate it was, and maybe you can take some information from that, whether it didn't go to plan or it did go to plan. Did you execute your plan? But it's important to know what was your plan beforehand so that you can better review and analyze and go forward. So I'm going to quickly jump to my plan from Friday, and let me just quickly jump screens. Here we go. There I am. No, I'm not there. But can you see? I'm just checking to see if you can see my screen. Okay, I'm going to put myself on there so you can relate to me. No, you can't see me, and can I move this? No, I can't move this. Okay, I'm gonna be quickly jumping in and out. So there we go. Never right in the bottom left-hand corner. Right, so this is my plan from Friday, and these were all the areas that I was looking at. I was looking at the Thursday lows at 3874. I was looking at the yearly lows and the at 355, 3855. I was looking at, I was obviously thinking as well that the prior day's overnight session created a low at 3856, one tick above the yearly lows. These are all the things that I'd noted in my notes, and I was aware of, I was conscious, and I was ready to take action if I saw I wanted to see to take a trade. So what was the first thing I was expecting to see or wanting to see in order for me to take a trade? Open. So this is in my plan, top left corner, well, top mid corner. I wrote that I was expecting an open impulse up to 3855, 3970, 375. That's where I thought that the idea of a quick short for a continuation lower was over. I didn't want to entertain that idea. If it got above there, I would think that, you know, maybe the longs have it, and I'd start looking at an alternative plan, which was plan 2. Although I didn't really have a bullish plan going into Friday. It was all about trying to get short. Anyway, plan 1 was an impulse up, and then an immediate pushback, and then we carried on trending, you know, on the high time frame, trying to take out those targets at 3874 and 3855. So what happened? Let's just quickly review. Did anything like what we were planning happen, and did we, more importantly, did we execute on that plan? So I'm just going to flip to the next slide. Let me see. I've got lots of slides here. I reviewed my trading, and this is just part of it. So ignore a lot what you see. What you're seeing here is the open. So this is the opening sequence. So what we're expecting to see a flush up to 3855, and then for it to push down lower. So what actually happened? Just coming into the actual open, I actually adjusted my plan. That plan was written over 2.5 hours before, when we were holding in the upper distribution of the overnight. So I adjusted my plan slightly to you know, be incorporate, because we were at the time of writing the plan, we were trading above the prior day's close, so we just dipped down below, and I adjusted the plan to impulse up to to the prior day's high, which is another important reference point. So that's a small change that you may not be aware of, but that was something that I did in my debrief on Friday, but I forgot to turn my mic on, so you wouldn't be able to hear that. Anyway, just cutting back to what actually happened. So we saw exactly what we wanted to see, which was an impulse higher. And then we saw this, you know, pennant forming where basically price action was getting condensed, and eventually we get a breakout. So this was the area that we're looking at. This is what happened. We see this like little breakaway from the pennant, very sharp move lower, and then it was just a continuation lower. So did I take a trade in this? I did. I won't go into it too much. I took a couple of trades. I managed to get short at 38.5 on this candle here. Did I hold it? No, I got out of it somewhere around here. I took quite a few trades early on, which was maybe not right, but that's what I did. I need to stand by that. So that was the opening sequence. So my plan and idea kind of worked out. Did I execute? I did. I tried, but did I get it right? No. So it just goes to show that having a plan and execution are two different things. Execution is really hard, and you also open yourself up to variance. The market can do things that you don't expect. At any given point, each moment in time is completely and utterly discrete. You can think you've got the best winning hand in the world, but then someone comes in and takes you out on the other side. So yeah, this is an example of having a plan, executing, but then for whatever reason, which you should try and analyze, it doesn't quite work out. So I'm just going to quickly rush to these are all my notes for the day, right? And you're welcome to look through them. And there's a lot of analysis on footprint that I tried to keep tab of. You know, did I miss an opportunity? Was there something I missed? You're welcome to have a look at the links below. But this is just cutting right to the chase now. We're right up to the debrief. The first thing I did was just quickly look at the candles. I've got this little pre-market opening. We had these opening highs, which were just below but not above the prior day's highs at 43. We had this opening swing level here where the other one is placed, and that these were key reference points going into the open. So what did we see? We saw this little quick sharp pull up into that area and a rejection, and the rejection pushed us all the way down into the 20s area initially here, and then we bounced high. Now I had planned, or I was preparing for this 20 area to offer some support for strong longs to continue the move high, given the overnight behavior and the pullback into the open. I was expecting there could have been potential inventory adjustments. So so that area of 2025 was an area that I was watching and seeing it bounce, and there was quite, there was some interesting price action on the open, but overall delta was declining. That was another key that I missed. Anyway, so what did we see? We saw it flush down to the area around 12s, 10s, bounce back up quite strongly. I think this is actually where I got my my short. Can't remember now. It's all a big blur. Anyway, we then continued to trend down lower, and it was a strong trend. We had no pullbacks to the VWAP. We had nothing of the sorts, in fact. It was just the best you could hope for. It was a double top or some kind of low volume node to get involved in. We had this little tricky area here where you might be thinking, oh my goodness, it's just broken above the prior high, little swing, localized high, but then we just carry on lower. And once we broke below this 3900 level, we had a really big increase in volume, and that's basically that took us down all the way to the to the yearly lows almost, but we missed taking that price out by a couple of ticks. Now this made me switch on, thinking, oh my goodness, we've had we've got the yearly lows in, we've moved down to it in the prior day's overnight session to 38.56, and we've just hit 38.57, and all of a sudden we've seen buyers, we've seen a bounce, and I'm thinking, oh my goodness, is there just some patient buyer who's sitting there at 38.55 just looking to accumulate and buy more and more and more? Are we just going to have a rip back high once these shorts get squeezed? So that was my initial thought, and I was thinking, okay, this is worth at least a scalp, because if anybody else is thinking what I'm thinking, this could be an opportunity. And more importantly, there was a change in the behavior. We saw this very big trend, very strong, sort of very tight trend down into the 38.57, but then you saw this big spike candle up higher, and that's slightly different from what we've seen before. That was the biggest rotation higher we'd seen since the session open started. So I was quick to think, oh my goodness, this is change, this is something that's different, I'm going to get long, and I got long 63s somewhere around here, and I scaled out at 78, I got long 63s, scaled out at 68 and 75, and I left a runner which I then executed for somewhere around the 60, high, mid 70s as well, in the upper range, somewhere up here. I think it was this bounce here. I got rid of my runner, just seeing weakness, that this wasn't going to, this looked like it was just going to, have another attempt to take out the high and then run lower. And what mistake was here was that I was just a little bit fed up of the day, and I was happy just to walk away because I didn't quite get the trades that I wanted to in this area here, because I don't know, for various reasons, which you can go through my notes and I explain, but I won't go through now. So what was happening here was, had this, basically failed auction just below the prior swing high. I think it was 77s. I think it got to 75, somewhere like that, where this number 8 is here, where hopefully you can see my cursor. And then we dropped again, and then we had a little shallow pullback to below this swing low. We never got as high as that. But again, you can see that, you know, buyers are trying to get above the price, you know, the swing high, but they're failing. We move back lower, and then we just carry off into the basically Brainard comments. We had some Brainard comments coming out. So I knew that those comments, Brainard is a Fed speaker. It's really always important to pay attention to when these guys are speaking, especially Fed's Brainard. He's probably the you know, he is the biggest hawk in the Fed. So if he says anything counter to what we expect from him, it might create a market reaction, and he certainly did that. He did say something that was out of kilter from what he normally says. He basically said that you know, we're going to front load rates, but then we might even put down rates next year. Now, oh, hang on a minute, that's a bit different. We've never heard him say that before. So when this actually happened, we saw an immediate reaction. And I'm just going to quickly bring another footprint chart for you to see, just to see what happened at that moment in time. So we were sitting on the lows, we were trending nicely into these lows, and what did we see? We just saw this very big candle up from the Brainard comments. You know, this signals to me change, and also you're seeing these very large pockets of volume. You're seeing Delta all of a sudden start picking up. We've got 1, 2, 3, 4, 5 blue Delta candles. So Delta is now reversing slightly. This is the biggest sequence of blue Delta that we've seen pretty much all session, and that should signify to you, ooh, something's changed. So we see an attempt to push price back lower, but we never get below the lows, and we see some big blobs of buying here, which I find these large volume indicators really helpful in Sierra chart. And then we get a squeeze going on. So this squeeze, because of the strength of the selling, I never expected it to go as far as it did. But, you know, the market will do whatever it wants to do, and you can't help that. You just need to be aware of what it might do and look for signs. What are those signs telling you? You need to be objective. You need to be aware, awake. You need to be present in the moment. You know, don't be looking at your phone, watching videos, waiting for something to happen. That is just the best way to lose lots of money. So you need to be present. So I caught on quite quickly that this was happening, but I'd already told myself I'm out for the day. I'm not trading anymore. If I was present, I'd probably be looking for areas to get involved short again. I think there are some key reasons not to get short this, given the structure that we had going into the Bullard comments. And that's also why I wasn't interested in getting short, and I certainly wasn't interested in getting long given what happened. So for me, I just didn't see any high probability trades, and I'd already switched off for the day. But one key thing just to look at here, look, a lot of people look for VWAP for a retracement. VWAP, we get to VWAP, and you know, we see a lot of volume being done here, but it just marches on through. We just get this bigger squeeze into the close, where we close at 38.98 for the day. It's OPEX as well, so you know, there's a lot of a lot of things going on there, and people looking to take prices above or below certain price points into the close to validate their options that they hold. So that's just something that just pay attention. We had Bullard, which basically swung the market from trending nicely lower to all of a sudden short squeeze, almost 100 points higher, which, if you're not aware of these Fed speakers, if you don't have a news squawk, if you don't have a news service, if you're not looking at some kind of news feed, this could be an issue. I think it's always worth having something like that. Even if you trade technically, it's worth being aware of things that might make the markets change direction, and where we might have a squeeze. Right, I'm just going to quickly go and cut through to a profile chart. So there we go. Do some profile training. going to cut through. These are all my notes. They're freely available to all of you on the link. There's an awful lot there. It's my template. I think it's a good template. I'll go through that one session with you guys, explain to you how and why I template like this. So this is basically the footprint analysis for the day, and I'm going to quickly run through this with you. I'll make it big. Yeah, that looks clear. All right. So what was happening? What happened? I'm not going to run through everything I said, but basically we opened, rejected this high from Thursday. We got to 41s, I think. The previous day's highs were 43s. So we rejected this Friday's highs, and then we just one time framed lower on the 30-minute. All the way down into the Brainard comments. We've got this nice little double bottom here, non-excess low, so I'm going to carry that information into the next trading session. But during the day, what was going on? What was happening? Why did all this happen? Why did we have this reversal? What were the signs that maybe we should have been aware of that might make us think, hey, do you know what? We could get a short squeeze going on here. So we start off in this little upper node here. This was the opening sequence where we did a little bit of volume. And then what we get here is we get this break from the upper distribution, this very first distribution, number one, down to the second distribution where volume is increasing. So this is a good sign for a trend. So we got this second distribution. Then we break down into the third distribution after we take out this Thursday's spike base. So these are all little reference points that I'm looking at, and then we take out the Thursday's lows very convincingly, and we chug along all the way down to these lows, which are significantly lower than the yearly lows. We hit 38.08, so we took out a good 1 percentage point move from that break of the yearly lows. We see stops running through, which is something I want to show you as well. Some footprints that illustrate those stops going off. So we saw this move lower, but more importantly, we saw a lot of volume being done here. A lot of volume being done here. And as this volume realizes that it's short and wrong, or it's going to start getting squeezed, these shorts have all got stops at some point, or they have regret. They've been chasing price lower and they are short at the bottom, where Bullard comes along, swings things around and says, hey, we might cut rates next year. He also said a whole bunch of other things, but that's the first time we've ever heard Bullard in a while talk about rate cuts. So a squeeze may be on here, guys. You've got to be switched on to that. A squeeze might be on. You're still justified in taking shorts, I believe, certainly below the yearly lows. You're looking for reference points to take shorts, but once we get back into the the yearly lows, that there's a potential for a squeeze on. Certainly once we get in up above the Pride Days range lows, you want to be thinking this is all over. I'm not interested in anything other than probably staying flat or a squeeze continuation into the close, because these squeeze runs tend to run into the close. So why did I think there was a squeeze? Well, this is something I call a Christmas tree, where you've got this higher volume at the lower base, then you've got slightly less volume, and then so on until you get to the top distribution where we've got the least amount of volume. If this depends on how this forms, but because we basically volume chased price all the way down to the bottom, the more and more volume that chased price, the higher the potential we had for a short squeeze if it broke certain reference points. So this is something you need to be aware of, which candlesticks don't show you. They'll never show you this, and this is why market profile, volume profile in particular, is such an important tool, because not even volume profile will show you this. If I just quickly cut to my volume profile, this is what is it? It's a monthly profile chart that I'm doing some research for going into next week. But I'll just quickly show you the profiles, and you'll see that the TPO chart doesn't show you any of this. It really doesn't. This is Friday's TPO profile. You really don't see these volume bubbles, which I then coined Christmas trees. Now that's not my term. It's something I picked up when I was on the floor at Axia. So I'd never heard it called anything like that. So anyway, it's a very heavy base with subsequent lower volume nodes above. This is my debrief of the profile charts. These are the things that these are the numbers that and the reference points that I'm carrying over into Monday's session. I think it would be a really important session. What we've seen the last few sessions is we have seen these these short covering rallies, okay, weak rallies. They have been weak because how do we know that? Well, there hasn't been too much volume chasing price back up, and what's tended to happen in the next session is that we've seen very little interest in a continuation of that trend, that squeeze in the next session. We might see it carry over into the overnight session, but once the RTH starts, we tend to see a reversal of that price action. So it's key to have some reference points to the downside. Even though we've rallied all the way back up to the weekly VPOC at roughly 3,900, it's worth having some reference points below. So I'm taking some of these low volume nodes in the structure that we formed on Friday. There's actually a lot of good structure on this profile that we can carry forward to take trades going into Monday. So Monday will present me lots of hopefully nice opportunities to get involved with the market. But what I'm saying is that even though we rallied up, that doesn't mean this is the year low. We haven't, the low's not in yet. No way am I willing to call that yet. This has not told me enough to sort of justify making that statement. So I'm still observing. I still want to watch. In order for the year's lows to be put in, I need to see some serious highs taken out, monthly VPOCs, that kind of thing. Monthly VPOCs are up at 49.010 or something, 49.15. Sorry, 4015. 4015. Yes, I'm right. Yes. Okay, so I need to see those kind of reference points being taken out. So this is this is just a temporary low. We've got a poor low, an unfinished auction at the bottom, which we need to pay attention to, and I'll be looking for clues going into Monday's session as to where this is going to go, and I'll be taking shorts as well as longs potentially if I see the squeeze continue. So what do I want to see from longs? I want to see longs defend basically this spike base low, roughly 38.80. I don't want to see them. I don't want to see price trading much below there, this little low volume area here. So I want to see that area defended. I want to see longs, if they're true, if they're strong here, I want to see longs hold that price and push higher, maybe to this monthly VPOC, which is acting as a magnet. The first area that's a magnet is this 39.20. Now I want to see shorts, on the other hand, I want to see them defend that. I don't want to see us breaking up and holding into this composite cave, because once we start holding above 39.20 area, which I've highlighted this little circle, then the likelihood is that more shorts might get squeezed and we start coming in to repair all this poor structure that we've created. We've got a lot of poor structure left over from Wednesday, and I do at some point expect that to maybe be repaired, tested, fixed, whatever you want to call it. So it could be Monday, it might not be Monday. I'm going to keep myself open, long or short. I'm going to have a plan A and a plan B coming into Monday, which I will post ahead of time. Okay, that's basically all I've got time to say. My head is buzzing. I wanted to quickly just show you a bit of price action stuff. Let me see if I can get my notes up. So these are footprints. So I'm going to do some footprint trading just to finish off here. Let me find my chart for you. Okay, I think I put them down as footprint review. So just some price action charts, just to look at footprints quickly. So what we saw a lot was these consolidation zones. This is not the best one, but this is off the open. And what you're seeing basically is volume accumulating, and then these stops that get run through the lows. Now, I think this is really important. So basically we had this flush up on the open up to 41. It was below this little pre-market open, and then we accumulated volume on the open, and then stopped through. Now I think if I'd been looking at this chart, I would have probably done better in executing my trade, and I made a mistake there. I was actually using a very short time frame rotational chart, and I was trying to keep things consistent for my viewers, and that was a mistake I made. I will be using this chart a little more often, so I'm introducing it to you now. This is a 5-minute footprint chart, and I prefer it to I prefer it for taking decisions during the trading day during certain conditions. That's the first one. So what you're seeing here is this, what I'm trying to show you here is this stop just below the lows of this opening volume. Okay, that was a good signal to get short here. And if you do take that short, where do you want to put your stop? You want to put it somewhere where, you know, volume is tapered off, which is this area that's grayed out. So this particular chart here will highlight areas of extreme volume, and then it will just, you know, try to hide all the residual volume that happens in the middle where prices moved away quite quickly. And this is another example. Again, we've got this volume accumulation, and then you can quite clearly see stops being fired off here. Bang, bang, bang. And then once these stops are taken out, you know, if you can spot this quickly enough and take a short below these lows, your stop shouldn't be much higher than these stops. You know, these price shouldn't be taking out these or coming back into this zipper here, this little area here. So that's just some footprint notes for you guys to sort of soak in. I've got some more in my journaling. I keep loads and loads and loads of notes. I do like to take pictures like this and put them into my notes, just so that next time I remember. If I miss something this session, I'll make sure I'll pick it up the next session because I'm aware of it, because I missed something. So there you go. This is all part of the journaling process. And that's it. That's a pretty long debrief, actually. I've gone way over the time that I wanted to spend, but I thought there was a lot to talk about. I think I mentioned a lot of tips about journaling and why it's important, and I will be doing a full webinar about journaling and what tools I use and how I do it, and all that kind of stuff. And I think it'll be really exciting for you guys to follow. So I'm going to leave it at that. You go enjoy the rest of your weekend, and I will see you tomorrow for another live stream.